Hello and welcome to a Dental Business Transaction podcast here in the start of 2022. I'm joined today with Abi Greenhough, my Managing Director, and we're going to be having a chat around the landscape of the dental market. Abi, welcome.
Hi Lily, bring it on 2022 and whatever it brings.
Great. Abi, now let's talk about the general perception of the market right now that we're hearing, not only from dentists, but also from the solicitors and the accountants that we work with.
So reaching the end of 2021, looking back at last year, when we all sort of down tools a couple of days for Christmas, we were all wiping our brow because it's been an absolutely crazy year. We're hearing the same from the solicitors that we work to. They're sort of brim up to capacity with transactions. And I think that's off the back of more volume in transactions in the latter part of last year. As practices started to see their recovery, they thought, now's the time for them to take their practices to the market. And we saw that renewed vigour with a lot more buyers into the market coming out of the pandemic, a lot more interest from associate dentists, and that interest hasn't waned at all. And I'm seeing a lot of new practices that are getting ready to open. I think, we're based in Leamington, and I think there's three new practices opening up in Leamington alone. Yeah. So there's a lot of interest, but there's also that sort of translates into what we're seeing in our market and the activity. We're seeing a lot of interest in maybe the sort of slightly less priced practices, and they're seeing them as build and grow opportunities. There's a lot of people that rather than a squat are looking at something really affordable with scope to grow, those extra rooms that they can see that they can fill in the future. So grow and build opportunities are really popular right now.
So Abi, this strong trend, and I'm sure you get asked this a million times, but do you see it continuing, and is the bubble going to burst?
I think in the market there's always going to be regional difference between practices, and depending on the practice type, difference in values, but I don't see the general bubble is going to burst. And that's supported by how well the dental sector has recovered compared to other industries. It's a wholly domestic sector and it's remained really, really strong and resilient during the pandemic, and investors are seeing it as a great opportunity as well because NHS practices were supported through lockdown. So I don't think that any of that interest is going to wane, and after all it's supply and demand that drives the market, and there still aren't enough practices and opportunities for the people out there that are looking for them.
I agree. And it's funny because you've been working with me now for 7 years. But I've been doing this for 17 years, purely dental. Prior to that, as you know, I did veterinary and optical practice sales. But I was asked the same question 17 years ago. Is the bubble going to burst? Have we peaked out? Is the demand for, it's quite extraordinary. And here we are in 2022. We've been through all this, but the market is genuinely still strong. And how are you finding it with the banks? Obviously, you get to see every side of the story in all the transactions. How are the banks supporting buyers with funding?
All of the lenders that we work with on our Tier 1 panel at Lilyhead Finance, they're all competitively offering fantastic terms for buyers still. So, lending is really competitive out there, and there's some really good deals for buyers. I think one thing to comment on is many practices we've seen their private element grow significantly compared to what they were doing pre-pandemic, and in some cases we're able to push those valuations up on the basis that for the last 6 or 12 months the revenues have been much higher, but what the banks are particularly sensitive about is making sure that increased or forecast revenue off the back of seeing that growth is sustainable going forward. And we're having to provide much more robust financial information to the finance team and to the banks to be able to show that is sustainable to justify that higher price.
Yeah, fair comment. So what would you say are the opportunities out there for dentists right now? Coming into the new year, lots of them obviously have decided this is the year I'm going to buy my first practice, or my second or my third or whatever. What opportunities do you perceive out there for dentists?
I think one of the opportunities now, NHS practices are delivering more of their contract in Q4 coming up, And a lot of the new patients and the new revenues in private or mixed practices have come from patients that couldn't access their NHS treatment. If that becomes available again, private practices need to think about how they can hang on to those patients and keep them as patients of the practice. Where they've seen their revenue grow by 20 or so percent, they want to be able to hang on to those as regular patients and therefore bolster their goodwill.
Okay, Abi, so let's talk about what's in the demand at the moment. What's hot and what's not. I mean, we've talked about squats, but and I know that we saw a huge resurgence of the popularity of fully private practices. What are you seeing right now? What are the trends?
I think pre-pandemic, we were looking at private practices being, pushed up in the ranks really in terms of popularity. And I think that's levelled out a little bit more, perhaps because NHS practices were supported through those tough times. And I think they're probably on pretty much of an even keel at the moment, I would say. I've still got a big cohort of people that are looking for those smaller NHS practices which have chance for organic growth with the private side. And then for my multi-operators that we're working with are really competitive about securing NHS contracts, sort of 500,000 plus. So those two elements are still very strong. So I think it's a really good mix and maybe even a little bit of levelling out.
So, okay, Abi, now we know what the NHS UDA targets are. Let's have a talk in terms of how this may potentially affect valuations.
Yes, so we know that dental practices in Q4 are required to do 85% target and orthodontics a bit more at 90%. But to think about what effect that might have on goodwill values, there's a few things to consider. So in 2021, we've seen a real private boom and seen mixed practices open up their chair time and their book for more private dentistry. So their revenues have gone up. And we've seen those private practices where their private book has increased phenomenally when patients couldn't get into their NHS practices. So now that those practices are opening up for more patients, the banks and the buyers are going to be looking very, very carefully to see whether that revenue uplift, those new patients and that profit has been sustained. So, of course, it follows that if we see a drop in those revenues and patients return to their NHS practices or practices have to dedicate more time to their NHS list, those profits will drop and potentially those uplifted valuations may fall slightly.
Yeah, well, that makes every sense, doesn't it?
And Lily, as we've heard from the BDA survey, 2/3 of practices believe that they're going to struggle to hit those targets with staff shortages and, difficulty of getting associates and patient cancellations. So we predict there's going to be clawback quite substantial later in the year, which is going to put that financial strain on the practice viability and their cash flow. They still have to pay their associates, their staff, their rent and all their overheads. So, some of those smaller practices with not a lot of other cash flow to rely on, may be under huge pressure.
Yeah, it's another interesting time coming up ahead. Goodness me, it's like the Grand National, isn't it, of events. There's all these hurdles to overcome, but practice owners have overcome an awful lot so far. But without a doubt, it's going to be an interesting time coming up in the next 2 quarters to see how they cope.
Another thing that we're seeing, talking to dentists at meetings, pretty much always comes in the topic of conversation that there's NHS practices with smaller contracts or where they're situated in places where the demographics support private dentistry, fee-paying patients. They are really considering converting those NHS lists to private. So we'll see, what effect that will have on values and profits further down the line.
Abi, what impact can you see on the values with practices not having enough staff? I know that you've had some recent examples of this kind of effect.
Absolutely. It's the hottest topic, I think, in dentistry at the moment and, the biggest thing that's challenging all of our clients. It's a challenge even in the major cities now, and particularly challenging to recruit associates onto NHS lists. Staff are being poached from one practice to another, being offered better rates. So from a point of view of practices, they're tending to see that their staff costs are potentially going up. So just for example, a 4-surgery practice with a £900,000 turnover, 18% profit, let's say £162,000 profit, a valuation on an 8-time multiple would be close to 1.3 million. Let's say there's a increase in staff costs by 15,000, that's 8%. And, we're seeing national insurance rises this year as well. The practice profits fall by 15,000 to 147. You translate that into a valuation, that's now 1,175,000. So that's a £125,000 reduction in the value. So it just really highlights the importance of keeping financial control, managing your costs and controlling costs, and that's in the context of inflation, adjusting your pricing and tariffs, really important to make sure you're pricing your time and your services appropriately, and looking for efficiencies and opportunities to grow. And also just keeping sane mind, because it's extremely stressful for practice owners at the moment when, there's got staff problems and notices giving in. So not only the sort of valuation, but keeping sane.
Great advice, Abi. Easier said than done, of course, but I know that there is help out there. And if anybody would like any introductions to people that could perhaps help them with some business coaching, mentoring, or accountancy help, please don't hesitate to get in touch. Let's talk about location shifts, because obviously there are the major conurbations. They're the big towns, they're the hot potatoes, as I say. We know that the price goes up. Buying practices in more rural locations, are you seeing people more willing to move and relocate to get the practice as a result of the pandemic?
I'm talking to more people that are willing to widen their search. Perhaps they haven't put down their roots, with schools or whatever, and they're looking to move and relocate for maybe better value opportunities. Mm-hmm. There was more of that coming out of the pandemic, when there was that sort of thought that people were moving away from the high streets and away from the city centres. But I think we're beginning to see that shift back a bit now, that there still really is that focus on those major areas, which I think are easier to recruit. I think one of the things is the challenges that we face in the next year in relation to practice sales, and also what might impact valuations, is staffing. I think it's the biggest challenge at the moment. Even in flight deals, there's associates maybe giving their notice in, or support staff giving their notice in, which can destabilise things a little bit. Mm-hmm. And then obviously some buyers don't always want to complete on deals till they know they've got that steady, the surgery is filled with associates. So staffing is probably one of the biggest challenges over the next year, and employee rates are having to be given maybe pay rises in order to retain staff. Mm-hmm. From sort of jumping ship to another practice down the road. So potentially staffing costs are on the up in order to recruit and retain people. Absolutely. So that's probably one of the biggest challenges, and some areas are still more challenging to recruit in than others. So keeping a stable staffing situation is one of the things, the bugbears of practice owners at the moment, which may have a knock-on effect.
And of course it's always been that way, but it's even more important now, isn't it, to keep a steady ship. Mm-hmm. And of course, as we've mentioned on previous blogs and discussions, when you are in the middle of a sale transaction, it's not the time to start changing the personnel, changing the payroll. You've got to work very closely with your seller, your buyer, what have you, make sure that everything is as it should be. Yeah,
it's about keeping, the costs in your practice as stable as possible, so not to risk your deal that you have with your buyer. But increasingly people are ringing me up and saying that if I don't give this pay rise now, I think I'm going to lose people. It is a real challenge at the moment.
And I know recruitment companies are having a very tough time. But
they've got lots of vacancies and probably not enough people to fill them at the moment, which is, I'm hearing, it's the same in restaurants, isn't it? Or in so many different places, they can't get hold of the people. Another thing to mention is we've recently heard that NHS targets have gone up, so 85% for your general GDS and 90% for orthodontics. So the focus very much for those NHS practices in the next 3 months is going to be either catching up to meet those targets and hitting those targets. So something to avoid, if it's possible and safe to do so, is a clawback in this final quarter, which could present a financial challenge, to into the next year for NHS practices.
That's very interesting to hear. And I suppose really, what's our final message to sign off here to people listening? I suppose if you are a principal and you're considering your options, you're considering selling, what would be your words of advice and caution to them right now?
There's nothing in the market that suggests it's not a good time. If you're ready and your practice is ready, then the market is ready to buy you, basically. So the market remains really, really strong. I think there's opportunities there really to stabilise the practice and grab those opportunities which we've had of those new patients coming to the door over the last 12 months wanting to join the practice or be treated. And I think patients are still very much looking after the way they look. There's opportunities in practice to really sort of capitalise on patients' demand for treatment.
Yeah. So it's all good really, isn't it? And of course, we are pleased to see that the dental market itself is very stable again. So, people must not feel that perhaps this is the wrong time, waiting to see what happens. We've had a year now, as you were saying earlier, of seeing solid trading. And so it's all good. Finally, Abi, let's talk just briefly about the multiples of EBITDA that we are seeing out there as a general rule. And I will stress that, this is not to be taken, as the law, because there's great flex in this. And on occasion, we far exceed the go-to-market sale price. It's all about demand. Let's talk about the general multiples of EBITDA being paid right now.
So looking at the last 6 months and working on averages, and we all know averages can sometimes be pulled up or down by the extremes, we are looking at 7.7 times EBITDA for a corporate deal. If we keep in our exceptional deals, our average is 8.6. But to give you a real idea of where the middle ground is sitting, it's around 7.7 for a corporate deal at the moment.
So in summary, Lily, the corporates for high quality practices are having to bid 8 times and sometimes more in order to even get a look in against their competition. That's being pushed up by more competition between corporates and investor buyers. And over the last 6 months, we, negotiating deals for our clients, have seen the earn-out periods come down from sort of typically 5 years to 3 years being the norm, and flexible terms for the targets, the revenue targets, the working conditions. So in that competitive environment and being able to leverage that competition, deals with corporates and investors are becoming much more flexible and compelling in order to win the practices.
That's good news for people, isn't it? Because obviously it shows that they're very keen to acquire and grow, and that would appeal to a lot more principals that didn't want the big, the golden handcuffs. 5 years, 7 years, it was way too much for them. So that's good to see that there is that flexibility out there without being punished financially.
And that's the thing, it's the whole deal, isn't it? It's who you sell to, what are the terms, what are you going to be paid, how long do I commit to, who am I selling to? It's the whole package.
So just to finish off, Abi, let's talk about the non-corporate deals. What kind of averages of multiple of EBITDA are we seeing for associate-led practices and owner-operated models?
Where practices change hands dentist to dentist, and the dentist coming in and tends to work in the practice themselves, retaining their clinical earnings. In the last 6 months, we have seen the average sitting at 3.6 times the multiple of the owner-operated profit. So just to clarify, that is with the principal's earnings in the profit, hence the different multiple range to the corporate purchases. Again, this is an average, so not all practices are the same, and we've had exceptional deals where the multiple paid is in the region of 5 and up. So there is variance between practices. And in summary, this has really been the year 2021 of the entrepreneurial dentist. There's been opportunities in the market for growing, responding to patient demand, adding additional resource to respond to those patients that want to come into the practice. So we've seen lots of practices, really take that entrepreneurial growth spirit. And equally, there are a lot of entrepreneurial buyers out there in the market. We saw a massive boost in buyers into the market off the back of the pandemic, and that has remained strong. There's entrepreneurial dentists out there that see the opportunity in the sector to grow businesses, and the market as a result is very healthy.
Thank you very much today, Abi. It's good to catch up. I suggest we catch up again in about 3 months' time and see where the whole market is driving. A spring update, I suggest. So for now, it's thank you and goodbye.
I'm sure those 3 months are going to fly by, Lily. I'm getting ready and pumped for them.
Great.